So I'm going to start us off on our case analysis for today. And what I'm going to do for the next minute or so is walk through the background of the case that we're going to be working on. So the client that we're working with is a company called Good Life Trade. This is an organization that's been around for a number of years, about 25 years, and they are recognized as the leader in the fair trade coffee industry. That's really where they got their origins. They've had great success growing from revenue of about 20 million to 35 million over the last 5 years. And their net income for the most recent year was around $755,000. But their success has come to a halt. For about the past 2 years, excluding any price increases, their revenue has grown at less than the rate of inflation. And this is in contrast to double-digit growth that they've had for about the last 15 years. There has been obviously a recession that they've had to deal with in the past several years. And along with that, there's a great deal more competition. Consumers today have a lot more choice in fair trade. And actually, there's about 300 coffee companies that consider themselves to be fair trade coffee. So this has been a challenge for the executive team. One of the other interesting attributes of Good Life Trade is that their executives are quite well known. They're the leaders in this industry. They lead definition of fair trade practices, policy. They also host conferences and are often asked to come in as keynote speakers. So the focus that we have for our client is really helping them get back to some of the same revenue growth that they experienced previously. What we'd like for you to focus on is a set of actions that you would recommend that Good Life Trade take to help them establish their future direction and get back to a path of growth.
Great, thank you. So this sounds like a very interesting problem, but before I get started and create a framework, I just had a couple of questions that I wanted to ask. So I've seen a lot of food labels, in the supermarket, and I'm not quite sure about whether I understand the differences or the nuances between them. So can you explain what fair trade means and how it might be different from organic or local?
Sure, that's a great question, and it is very confusing. One of the things that defines fair trade is really the production process and the supply chain. So specifically, producers are in a relationship with their buyers, in this case, Good Life Trade, and they really try to establish good prices, good wage conditions, and not taking advantage of many of the farmers and growers of these products who are often in third world and developing economies. So there's a little bit of a philosophical approach and some mission behind it. That's very different than organic. Organic is much more about the growing. So use of pesticides or no use of pesticides, what type of fertilizer, the production of the seeds, non-GMO, those sorts of things. And then one of the other trends in the food space that we're very aware of right now is the idea of buying from local farmers. And that has to do with proximity and seasonality. So Good Life Trade really concentrates today on the fair trade type of products.
Okay, thank you. And so how does their mission, since they're focused on making sure that the farmers get a good deal as well out of this, how does that mission tie into their growth goals that they might have? More specifically, do they have any revenue goals or profit goals that management wants to hit in a time frame to hit those goals?
Sure. So the goals piece, I think they're looking back a little bit historically and hoping to regain a double-digit growth percentage. So certainly something greater than 10%. And they would very much like to see that happening at the top line. I think they feel fairly comfortable that they have a good cost structure behind that. although it's certainly worth exploring, but it is very much about the top line growth.
Okay.
The management team of Good Life Trade, their entire business mission wraps around the concept of fair trade. That was the origins. I think the original founders felt very committed to helping farmers, helping their individual livelihoods and their conditions, and have built that and integrated it into the mission of the company to the extent that even the employees of Good Life Trade are probably a little bit better compensated. They have more benefits. They don't have those seasonal migrant workers like someone in this business who doesn't have that mission might. So there's a number of things that they do that really integrate all of that philosophy into their various business activities.
Okay, great. Thank you. So now that I have a good understanding of fair trade and the company's mission, I'd like to take a minute to lay down my framework that I can use to suggest some options for growth for Good Life.
Great, very good.
Thank you. All right. So I'd like to start by really understanding the fair trade market, what have been the recent trends, whether it's growing or shrinking, and what are the drivers behind those trends. And so that'll give me a sense of how the fair trade market is expected to do in the future. And I can then sort of use that information and also look at our competition and see what their strengths are and compare those with our own strengths and see how we might want to do a few things differently. And I'd also like to see whether our competition, how they have fared, whether they have also seen some stagnation in growth or whether they're doing a bit better than us. Next, I think I'd like to sort of dig a little deeper into our financials. So break down our profits into revenues and sources of revenue, as well as our costs. Look at fixed costs and variable costs, and also benchmark those against our competition to see if there's anything that jumps out, whether we can do anything different in our entire value chain, from procurement to production to distribution to our retail operation, and see if there are any sort of internal improvement opportunities there that we can look at. And then after I've done this analysis, I'll be in a good position to also evaluate some strategic options that we might want to consider. So we can either grow by acquisition, and so we can look at some potential acquisition targets and see if acquiring any of our competitors makes sense. We could also look at some organic growth options. So we could either extend our product line and get into some new products, or we could look for some new geographical markets to sell our existing products. And we could also sort of look at some new distribution channels in our existing markets as well. And so if we're not currently, if we don't have an online operation, that might be something to consider as well. So I think after I've done this, gone through this framework, I'll be in a good position to make some recommendations on how to grow the business. So to start with, I'd like to look at the fair trade market and really understand what have been the recent trends in that market, and also get a sense of what are the drivers behind those trends. So do we have any information on whether the fair trade market has been growing recently or shrinking?
I think we might have some, but maybe tell me a little bit about what information you think would be useful for you.
Right. So I'm looking for sort of overall the fair trade market, in terms of just revenues. So whether the imports, for example, whether they have been growing or shrinking. And next, I'd like to break that down by segment and really get a sense of which are the products that have been growing, and if there are any that really jump out. And I think that will really give me a sense of how our portfolio looks like, and whether we need to rebalance it or maybe even get into some new products.
Okay.
So
great. So I do have some information to be able to share with you. So I'm going to give you 2 pieces of background that might be useful related to that question.
okay, thank you. So the first chart here that I'm looking at is it's just the fair trade imports data, and we have it for the previous 13 years, and it is by segment. So it is we have numbers here for different products. So I see coffee, tea, cocoa, grains, sugar, etc. And the second chart here is growth rates and byproduct share. Okay, and that's also for the last 13 years. And so that's also useful because it gives me a sense of how each of those are growing. So I think the first thing that really jumps out from the first chart is that coffee has been around. Coffee is what's really started the fair trade business for us, and it grew really well over the years, but it looks like it's some of that growth is really stagnating, because we see a 1% growth rate in the last year. And looking at the other products, so it looks like we've been adding products every year. There are new products that are coming into the fair trade market, and that's a good sign, because it means that we could potentially add more products to the fair trade market, and that will generate some incremental growth opportunities. But just looking at what we have currently, it looks like sugar, vanilla spices, and tea are really growing well. Although they, in terms of the numbers, they're still fairly small as compared to our coffee numbers. But it definitely looks like there are some growth opportunities there. And the coffee business, even though it's stagnating, it could be like a cash cow for us. So we could use some of that cash and really fund the growth in these rising stars, the tea, the cocoa, the sugar, and even maybe a few other products that are currently not in our portfolio. And so I'd like to evaluate those opportunities. I'd also, looking at the second chart here, and this is total pounds in the past 13 years for fair trade. And so the growth in the last year is just 6%, which is much lower than the growth that we had in the early years. And so it looks like the overall fair trade market is also stagnating. And so I'd like to dig a little deeper into understanding why that is the case, whether that is due to like a recession or something which is temporary, or whether that's driven by consumer preferences towards maybe organic or local, that will be something that's more permanent effect, and so that's definitely something to be concerned about. And I'm also looking at the percentages of those overall fair trade market, and I see that coffee as a percentage of the overall business is going down. So from 100% in year one, it's down to 67%. Whereas the other category is really growing. And so I think that ties back to my initial comment about, there's an opportunity for new products to get into the fair trade market. And so we can definitely leverage on that opportunity and see if there are any opportunities to both rebalance our portfolio and also look at some new product opportunities.
Good.
So I think next I would like to see just how our competitors are also faring, with this stagnation in the overall fair trade market, and whether they're doing anything different from us. So do we have any information on who our competition is and what their strengths might be?
Mm-hmm. So the competition in this space is somewhat concentrated, and then there's a huge piece of it that's very fragmented. So there's a number of large grocery chains that have started introducing fair trade products. You can imagine the biggest one is Whole Foods, but then there's a set of other smaller, more city-based grocers that also sell fair trade products.
Okay.
Then along with that, there's just hundreds of other small companies. No one is larger than Good Life Trade in terms of being a pure provider of fair trade products. We do have a little bit of information that might be useful given the question that you've asked. So you have that in front of you.
Thank you. So this is an income statement for Good Life Trade and one of our competitors. And so the first thing that jumps out at me is just how big we are as compared to our competition. So we have 36 million in net sales as compared to about 4 million for our competition. So that's really like 9 times as big as our competitor here in terms of net sales. And we also have some line items here, percentages here for each of our expenses, and just benchmarking those against our competition. I do see that our cost of sales is 64.8% as a percentage of our net sales, which is higher than our competition. Our competition is at 62.9%. And so that could be driven by what you had mentioned earlier about our management being leaders in fair trade and really marketing fair trade. And so it could be that we are spending a lot of money there and our competition is just they don't have to do that. They're really small, but they are reaping some of the benefits off of that marketing that we do. So we might want to look at that and see if there's any opportunities to reduce some cost there. I'm also looking at our gross profit, which is slightly lower because of that issue as compared to our competition in percentage terms. Looking at operating expenses, it looks like we are doing much better than our competitor. And even on the income side, operating income side, we're doing better. But on the net income side, we have a 2%. We're making 2% of sales, where our competition is making 3.6%.
Okay, Karan, so now that you've had a chance to look at some of the data, the financial information about Good Life Trade and their competitor, why don't you take some of that information and do a little bit of a projection? What could be their profit potential if they were to get to some of the benchmark levels that you were talking about?
Okay. So we discussed that we could potentially get back to a 10% growth rate in revenues. And so their current revenues are about 36 million. Is it okay if I round off the numbers for simplicity?
Yes.
Okay. So the current revenues are at 36 million, and a 10% increase on that would be 4 million. So their new revenues would be 40 million. And we also discussed that there is an opportunity to decrease their cost of sales and bring it to their competitors' levels. So they're at 64% currently. The competitor is at 62%. I see that they might actually have to do a little more marketing and keep that marketing spend higher than their competitor. So I think there's a potential to decrease it, but not completely to their competitors' level. And so if they can bring it from 64% to 63%, that is about 26 million in cost of sales. And so that would mean a gross profit of about 14 million. And if we keep their operating expenses at the same level, which is about 35%, that would mean that their OPEX comes out to about 5 million. And so that gives us a new net income of about 9 million. So that's a significant improvement in net income if they are able to increase their revenue to 10% and also decrease their cost of sales.
So could you, given that, maybe create a brainstorm list of some potential ways that you think that someone like Good Life Trade could bring down that cost of sales?
Absolutely. So to do that, I'd like to really look at our entire value chain. And so I'm looking at how we procure our products, whether there's any production involved, distribution, our retail, operation, and finally our marketing. And so I'd like to really dig a little deeper into those categories and see whether there's any room to save cost there. Since our overall mission is to really make sure that the farmers are getting a good price, I don't think saving. We want to really focus on the procurement side. We probably want to look at the other areas and see if there are any room for efficiencies in production, distribution, and our retail operations. And on the marketing side, as I mentioned earlier, there might be room to either do it a little differently or do a little less of it. And so I'd like to evaluate those opportunities as well.
So back to your first point about the area of procurement, what could they do and why wouldn't you think that that would be the right approach?
So when I consider procurement, you definitely get a lot of efficiencies of scale there. And so, if they were to, they are already pretty big, but if they make an acquisition, they could probably get even bigger, and then they could use that leverage to procure their products at a lower price point. But I think since the overall mission of the company is to make sure that the farmers get a fair price, that won't really fit with our overall mission. And so for that reason, I don't think that we should focus in on saving on our procurement costs.
Okay.
So I think one thing we can consider is what our competition is doing. So in terms of distribution, how do we compare against our competition? And so do we have any information on where we are selling our products, and how does that compare with the competition?
I mean, what we know, we have some centralized warehousing in the US, so it comes from wherever its origin is to that central warehousing onto the retail channel. Many of our competitors, because they're so much smaller, they can actually ship directly into the retail channel. So they don't have the same infrastructure that we do in the sort of distribution network. We have an extra layer in some cases.
Okay.
But we also have a much larger retail footprint. So there's a different set of logistics that are involved.
Okay. So I think having a bigger operation, it really helps in the efficiency, on the efficiency side, but only if we are really selling in all the geographical markets that we serve. And so do we have any information on whether we are really getting the benefits of having a big distribution network, whether we are reaching out to all the geographical markets, and also I'd like to understand if there are any differences in the markets themselves, whether some markets are really generating a lot of revenue for us, whereas some markets they are not really generating the revenue for us, but it costs us a lot to just have a presence in those markets.
Mm-hmm. Yeah, I do have some information about our sales footprint.
So this is interesting. So this is our US sales by state. And I have here states color-coded by revenue per state. So the darker states have revenues, or the darkest shades shaded states have revenues of over $1 million. Okay. And so I see a trend here where the West Coast states, California, Oregon, and Washington, they generate a lot of revenue for us. And also some of the Midwest states and the Northeast states do. And I guess part of it is due to the weather. Since coffee is one of our biggest products, the cold states definitely probably have more coffee consumption, but it's also potentially the population, and so there's a lot of high density of population, in these states, and
And for reference, their distribution center is in Northern California.
okay.
They only have one.
Okay. So that's interesting because we have this one distribution center in Northern California, but we are serving all the states. So there's a lot of cost involved in probably shipping the product to all these retail locations across the US. So there might be an opportunity here to invest in maybe another distribution center that's closer to the Midwest and the Northeast. And that way we could potentially reduce our distribution costs. And so that might be something to really consider. I think another thing that I might want to dig a little deeper is whether we have an online operation currently, and if we do, how big is it? What percentage of our sales are currently online? Since online spending is expected to really grow in the near future, we might want to really look at how we are positioned and whether we have the capabilities in place to really grow our online business as well.
Yeah, there are some online sales. It's probably less than 10% of the revenue. I think the product portfolio has been a little bit awkward to sell online because it's somewhat like groceries. And there is some growth in online grocery sales, but clearly that's not a market that the online industry has fully tapped into yet, although there's clearly some growth going on there.
Okay. And so I think beyond these opportunities, I talked about our product portfolio and the need to maybe rebalance it. And so we might want to see if there's opportunity to get into new products. So I'm looking at this exhibit here, the current products in the fair trade market, and there might be an opportunity to, it looks like these current products are like just the ingredients that go into some finished goods. And so there might be an opportunity to get into the finished goods market as well. So you could package these ingredients and sell those as well under the fair trade label. Mm-hmm. And that might help generate some additional revenue for us.
Mm-hmm. If Good Life Trade was going to pursue some type of finished goods, what ways might they enter that market? Because clearly it's different than just selling cocoa through a retailer. They might have to have some additional process in their value chain how could they potentially pursue that?
Right. So I think for finished products, one of the gaps that we would need to fill um, in our current operation is just the packaging operation, and I think we could either partner with an existing company, and that way we don't have to invest in building our own capacity, and we could partner with somebody, and they can take care of that operation. Um, but we will definitely have to figure out what our unique sort of recipes might be, and so we would have to invest in um, doing a lot of consumer research and see which of these finished products might be best suited um, to our current customers, and what are they really demanding. Um, and so once we have a product, we would definitely need to market it as well, and under the fair trade label. And so there's definitely a lot of cost involved there, but that is one of these options where it could potentially be a big high growth option for us. And so um, it would be good to really analyze uh, both the projected revenues and the costs involved and see if the margins really make sense for this investment. So now that I've gone through my initial framework, based on our discussion, I think I'm in a good position to evaluate the strategic options that we might want to consider, and just look at the pros and cons for each of those. And so the strategic growth options that I would like to consider, I'm essentially looking at three options here. The first option would be to grow by acquisition. The second option would be to grow by offering new products. And that would include both food products as well as getting into new product categories as well, beyond just food. And the third option would be to look at the opportunity of maybe packaging the current products that we offer. So instead of selling the raw products, we can package them and sell the finished products. And so what I'd like to do is evaluate these three options across some criteria. And so I'm looking at whether we have the cash, how much cash it would take to pursue each of these, how much time it would take to implement these options, and what's the riskiness of each option, and finally, what's the financial potential for each of these options. And so before I evaluate, I'd like to just get a sense of how each of these options might fit with the existing business. So do we know if the company has done any acquisitions in the past, whether we have successfully acquired anybody, or is that something that management feels comfortable with?
Well, that's a great question. To this point, Good Life Trade has grown completely organically, and it's been something the management team has really emphasized. Culture is a huge component of their business, the way they treat their employees, the way they treat their suppliers. And also, they have a very unusual operating structure where they operate almost like a co-op.
Okay.
So as they've previously thought about acquisitions, they've really had a hard time mapping into that. So to this point, they haven't done anything in that area.
Okay. Is that something that the company is in a position to pursue? Do they have the cash that would be needed to acquire a company?
Well, that's another great question. So they do have a nice, healthy cash balance, but through their board covenants and their financial structure, they have a minimum cash balance that they're always required to retain. So to really execute an acquisition of scale, they probably would have to do that by taking on some type of debt.
Okay.
So they may have some challenges in that arena if they're trying to be fiscally conservative, which the company has always been fiscally conservative.
Okay. So I think based on that, I can see that acquiring a company is going to take a high amount of cash, and it can take, medium to long term to really integrate a new company. And so it's not something that you can do very quickly. And there's also definitely inherent risk involved with any acquisition. You have to really integrate the people and the processes. So it is a risky option. But if we can execute and find the right company to acquire and execute and successfully integrate, there's definitely a significant amount of potential to grow our revenue and profits. And so there's high potential with that option. Moving on to the second option, which is new products. I'm especially interested in looking at the new categories. Is that something that management has considered? And my hunch is that, since we are the leaders in fair trade, that could be something that they are really good at, and they could potentially execute on really well. But I wanted to get a sense of what management's thoughts are on that.
Yeah, so your hunch is correct. I mean, this is something that really Good Life Trade is well known for, and their staff has a talent. I think, though, there is a recognition that they may have taken their foot off the gas, so to speak, especially during the recessionary time, and perhaps they haven't been as aggressive about pursuing less obvious fair traded products. I think the portfolio right now has some of the more obvious ones. So it's something that they have their attention on, but may not have been as much of the emphasis in the last few years.
Okay. So this option, it would require a significant amount of cash as well. I would say less than an acquisition, but you need to create new partnerships with the producers, maybe in countries where we currently don't have an operation. And so it might take some time as well to execute on this. On the risk side as well. On the risk side, though, I think since we are good at doing this, it is a relatively lower risk option. If we can find these partnerships, it should be a low risk option to execute on. And on the financial potential side, it could be a great opportunity for us. Since we are the leaders, we would definitely get some first mover advantage as well by getting into these new product categories. And so medium financial potential for that option.
Great.
And finally, I'd like to look at the option of selling packaged goods using some of our existing products. And so I think to do that, I'd like to understand, whether that is, so packaging goods involved a packaging operation, which we may not currently have. And so we would either have to invest in building capacity on our own, or maybe partner with somebody who could do that for us. And I don't know how comfortable our management would be with that. So do you have a sense of what management is thinking on those terms?
Yeah, so I think a couple of things. One, it's not really an area that they've looked at previously, so it's kind of an interesting new idea for them. It extends beyond their capabilities, so they're inherently kind of risk averse. So that's probably worth considering. But they have had organizations and startup firms approach them who have this type of capability. Um, so there could be some ways to share the growth opportunity and mitigate the risk. So I think that there's potentially some opportunity to maybe highlight that opportunity for them, as well as showing them how it could be feasible.
Okay. So I agree. This would be an option where, um, you know, there is some risk involved, but potentially there's a lot of reward as well, because, since we are using our existing products, we would really get the efficiencies of scale by just adding that packaging operation. And so, I would rate it as a medium on the risk side and a high on the financial potential side. It isn't something that you could do in the really short term. So I would say medium time to market for this option. And on the cash side, again, it could really vary based upon how we actually set up that packaging operation, whether we find a partner for that or whether we decide to do it on our own. And so it could be low to high on that criteria. And so I think based on this analysis, I can see that acquisitions, even though it could be a high potential option, because of the riskiness involved, it could be distracting for the management as well. And so I would really prefer the other two options. The option of getting into new product categories. That's something that the company is good at, and so we could really build on that capability and get into new product categories, as well as also look at extending the food products that we sell. And the packaged goods, I would definitely consider that as well, and see whether we can really execute on that in the long term as well. So this analysis has been very helpful in evaluating these options, and I think I'm in a good position now to take a few moments to come up with a solid recommendation. So our overall question today was to evaluate and recommend options to management to get back to that double-digit revenue growth that they're looking for. And the financial analysis that I did indicates that we need to get back to about 10% growth in revenues. That will be an incremental $4 million in revenues. And also our profit can get back to about $8 to $9 million. But that would depend upon our ability to get our cost of sales down. And how do we get there? So there are a couple of short-term options, and then there are a couple of long-term options that we looked at. So in the short term, I think one of the options that is really attractive is to get into this new food and new product categories. And that is something that the team is really good at, and it is a really good high potential option for us. Another thing that we could do in the short term is also just get down our cost of sales, bring it down by really expanding our warehouse capacity, maybe opening a new warehouse in the center of the country. That would lead to low distribution costs, and also expanding our online operation. and that would really capture some of the online growth that's projected. In the long term, I think we need to look at the packaged goods option, and really that's another high potential option, and we can look at that and really get some big efficiencies of scale, if we go down that path. And another long-term option that we could potentially consider is mergers and acquisitions. And so if there are suitable targets that the company can acquire, that can also help us grow our top line and our profits. So some considerations that we might want to keep in mind: the fair trade label, since it's unregulated, we need to see the trends in that space and see whether consumers are really going towards fair trade or going away from it in the future, and also whether there are any regulations that might be enforced in the future, especially on the food side. In terms of next steps, I think we can look at starting with some consumer research around which would be the new food products or the other category products that might be the best ones for us to venture into, and also establishing which partners we would want to partner with to source those. And also we should really evaluate some of these options in a lot more detail to figure out how the profitability impact would be. But overall, I think if we look at all these options and look at the ones that are most attractive, there definitely are, there is a path for management to really get back to that 10% or double-digit revenue growth in the future.